right, let's do a little test. All right, we can see that we've got audio. Yes, it is Dan Kemmis. Hey, we've got a neat little show for you today. It's called The Dip. And then in this case, it would be considered pragmatic financial advice during uncertain times. It's an Acme Podcasting Network production, proudly hosted by yours truly, Dan Kemmis, working in close affiliation with a variety of my homies to, how shall we say, calm your nerves, tell you some things you already know, and help you feel a little more comfortable as we all ride these complex waves together. All right, okay, so I told you I'm making something new today. I'm basically responding to a sign of the times. So again, it's Dan Kemmis with the Acme Podcasting Network. In this case, this is a little something I'm calling The Dip. All right? It's pragmatic financial advice during uncertain times, and in this case, we're relying on our network of close personal homies, people who have pedigree, who've been there, who know what they're talking about. Your name for the record, sir?
My name is Matt Bolts.
All right, Matt. So wait a minute. I'm calling you up during my new thing, The Dip. First, it's my own little reference, right, just to a state of the times, right? It's 3/9/2020, a date that will probably go down in history, I would think. We'll see. But okay, so I'm calling you for pragmatic financial advice during uncertain times. What makes you qualified, sir? Why should we dial you up?
Well, I was an investment advisor for about 22 years. I was a financial planning degree before that. So I've been following the markets for close to about 30 years now.
Really? Okay, so you have some tenure, and then is it fair to say that still today, after 30 years of working it, you watch it closely? Do you do that?
Yes, I do. And yeah, even more closely, I built up a financial planning practice of about 20 million of assets under management and about 150 clients. And I sold that 2 years ago to work on some other projects. But the person that I sold it to was my longtime assistant and partner. And so I talk to him still every day. And boy, today my phone rang from all kinds of clients from years and years asking what to do.
I would imagine it did. Now, wait a minute. So this strikes me as we have the best of both worlds in that, one, you're tenured, but also you're free of some of the, because traditionally there are some things that would keep somebody in that role from advising, on a phone call. I mean, first, we need to put a caveat in place. Hey, we're just people on the internet, okay? Over time, learn to trust us. Don't just trust us. We'll show in a track record that we know what we're talking about and we know what we're doing. But at the same time, I would tell anybody, hey, the first time you listen to anybody, the first time you talk to anybody, grow your trust. But basically, you can speak freely, right?
Yes, I can. And you nailed it. A lot of people with licenses they're licensed through a broker-dealer or a registered investment advisory firm, and those people are not allowed to, or they don't want people to give their true advice, especially in written form or in recorded form, because they can point to that 1 year, 5 year, 20 years from now and say, no, that person was wrong.
Right. And in this case, I do want to be clear. We expect to be wrong some, okay? This is a tricky, complex moment and complex game. So, okay, the dip. Let's just start with the state of today. So 3/9, it's a Monday. Okay, it's 2020. There's a variety of things going on right now that could be, I guess you could consider them potential crises, not the least of which is it all running together to express itself in like a giant market spasm. What would you call today, Matt, from a financial perspective? What happened today?
Really was fear and a lack of buyers. If anybody saw the headlines over the weekend, the Saudis and the Russians are fighting about oil, and oil dropped 25 to 30% last night or yesterday. And so that everybody woke up this morning seeing futures off 1,500 to 2,000 points and oil down 25%.
Oil, right?
Scared a lot of people.
Oh, man,
on top of everything else we have with the virus.
Right. A natural slowdown projected in the economy based on just some of the virus stuff and all of that. And then on top of it, some of the articles I was reading today we're stating that, look, the oil's actually potentially a bigger issue than, and I don't mean to laugh. I just find it ironic. That's a laughter out of a mix of fear, concern, and that whole thing of, wow, when it rains, it pours. It's not a laughter out of, ha ha, what a laughing matter. No, not at all. So, okay.
When you're right, it's a very historic day. This is the biggest point drop in the history of the markets.
So, okay, part of this whole approach, the dip, okay, basically, I use the term buy the dip, but in this case, I mean me, right? Because I don't know the specifics of this industry. I'm actually doing this to help teach myself, right? Learn by doing, and engaging professionals such as yourself to learn through. And then buy the dip is ultimately, it's about, hey, wait a minute. Let's move past the headlines. Let's move into, hey, what do I do with my portfolio? All of that stuff. But to get there, we got to lay some context. We got to, understand some things. So, let's start with this one. Okay. So what's a typical question that you got today? What kind of question do you get on a day like today? I mean, Matt, what do I do tomorrow? Geez, Matt, I mean, what were the questions that you were hit with today?
The first one was, what do I do? What should I do? Should I sell? And then the other one is should I buy the dip? And I talked to a couple old clients today, and one of them decided they were going to buy some more today, and one of them got completely out.
Wow! Real extremes.
Yeah. And really, we see kind of in a bull market, then people are trained to buy the dip, and hey, we got something on sale. But as we head into a bear market, if that's what we're doing, then the new term now is, should I sell into the rallies?
Interesting.
So you will kind of see a fundamental change from investors during that time.
Hey, I think I know, but I'd like you to square with me so I do know. Bull market versus bear market. What exactly do you mean?
So basically, there's a couple different definitions if they tie it to the economy, but really a bull market, if the market and we have positive revenue growth for 2 quarters, then we're in a bull market. The bear market, one of the indicators is if we've dropped 10% or more off of the high. And as of today's close, the Dow's down about 19% from its high, which was reached on February 12th. So less than 4 weeks ago. The S&P is off about 18, almost 19% during that time.
Wow.
So that now we're past the correction, and a lot of people are saying bear market, but we'll need to see a quarter of negative earnings growth before we'll see an official bear market.
Interesting. So okay. So this is another point of the dip is, hey, I don't know. So you're going to face some, I guess we'll call them, easy or basic questions from me as we work. But okay, so now today, I mean, just as an armchair, I have to say, even with my paltry portfolio, I'm like, oh, I should just pull it all out and put it in the mattress, right? So, okay, these questions, what guides the difference? I mean, is it my own personal choice? What guides the difference between you telling me to buy or sell?
Really your objectives and the time frame for when you're going to need the money, and how diversified is your portfolio. So the client that I mentioned earlier that sold everything today, they are right where they need to be. They're generating enough income. They don't need to take a lot of risk. So they don't want to take any more risk, because if they were to take a 10, 20, 30, 40% hit, then that would put them below the level that they need to support the level of income they need for the rest of their lives. So that's a big risk, is messing with the rest of their lives. The clients that end up buying a little bit today, they have plenty of time, and they had been selling over the last couple of weeks and had been raising some cash within their portfolios. So they were a little more prepared coming into this, and so they weren't as worried about the drop today. They're seeing as everything is on sale.
Wow. So it really is. It's intimately personal, right? I mean,
and then good diversification. Sorry to interrupt, but yeah, if the person has 50% of their portfolio in equities and 50% in bonds or safe or real estate, then that a 7 or 8% drop in a day only it brings their portfolio down 4%, but maybe the other positions in their portfolio, since they're safe haven assets, then those came up.
Sure.
And then those clients that invest in private companies or non-traded investments, then those companies are doing okay because their valuation is determined by how their company is doing, and not a crazy market just selling everything.
Right. And then I would imagine that in a state as tumultuous as the moment right now, it's a daily watch. It's a daily decision, I would think, right?
Yeah, if you're not diversified, I'd hate to be. You'd have to watch it daily. But by having some in things that don't move very quickly or things that just pay a set interest rate, then if you're worried about half your portfolio, that's a lot better than worrying about 80 or 90% of your portfolio.
Certainly.
But no, you nailed it. You don't want to make decisions on a 10-year, 20-year, 40-year financial plan by the actions of one day or 1 week or even 1 month. So you can't be reactionary, and nobody can time the market, but we can see lots of indicators that say, hey, maybe we should get a little safer now, or maybe we should get a little more aggressive now. So you digest that information each day to I guess give you big indicators to move over time.
Sure. So, okay. Today now, a lot of these key indicators are in we'll say an adjustment period, right? In that state, I mean, is there a current? I mean, in your view, is there a safe haven? Is there some place to go?
Historically, usually people go to bonds, but there's a lot more concern now of corporate bonds, where companies that are getting downgraded in their credit, or if credit starts to dry up. Yes, historically, government bonds and very short-term government bonds are a good place to park money, sort of just money market funds. And unfortunately, those aren't paying great rates, maybe 1 or 2%. But in these types of times, a lot of people are happy with just not going backwards.
Oh, so funny, right? Again, 1% or 0.75% sounds a little bit like disheartening, unless you measure it against something that, like you say, is actually negative, right? So now, okay. So how long does it take for you to build the trust with a client to be to the point where you're like, okay, I want to work with this client and they want to work with me? Does that take weeks or days? How long does it take for somebody to actually typically decide they want to work with somebody at this level?
I'm not working with new clients on an official basis of giving recommendations with my licensing, but I do work with people and talk with them, and really it's all over the board. It takes at least 2 to 3 meetings for me to get a feel for what the true pressure points are for any one investor. Everybody likes to manage a portfolio from hindsight and say, hey, if we would have been in this stock or this fund or this asset class last year, we would have made 30%. But really, it's an understanding of a person's risk. If they open in a statement and says it's down 20%, is that going to cause them to lose sleep? Or if they read in the newspaper that the market went up 20%, but they weren't in it, is that going to cause them to lose sleep? So are they fearing they're not gaining, or are they more worried about losing something? So that's usually one of the first ones. But then time really is the main component. And so if somebody has time, then they can take a little more risk. But really, through talking with someone, I'll ask maybe 10 questions. What happens if the market drops 10% tomorrow? How would that make you feel? And if people say, well, that's fine, I'm investing for 20 years from now. I don't want to see a 10% loss, but that's part of how the market works. I'm okay with that. But if on the flip side, if somebody says, no, I can't lose 10%, that would take me a year or 2 years, or that could cost me serious time in my retirement, then that's something that we really have to dive in and understand, because we can't take a lot of risk if someone is really close to their threshold of asset or time or income.
Sure. And while I would imagine there are variables, ultimately risk equal reward in some of this. I mean, it's right. It's that whole thing of like greater risk, greater return, smaller risk, probably less return. Ultimately, a judgment that is a very fine line. And at the same time, okay, so now today, right? This shockwave after shockwave coming with regards to news and such. I would imagine you're dealing with some people who are in a little bit of fiscal shock, maybe?
Yeah. No, yeah. And then when they ask, someone asks, well, should I buy today? Then it's, well, what I like to ask, well, what has changed? Why would we buy today versus Friday? Is it because everything's down 7 or 8% or more from where it was Friday? Or do we think there's something new coming that will help the market? So right now I'm worried because today's drop was oil and that hasn't been fixed. And the previous 2 weeks drops were due to the coronavirus and that hasn't been fixed. So what is the next headline? That's really over the last 10 years, that's been a new viable risk is headline risk. That
Wow.
People are reacting just based on a 8 or 10 words that
Yep.
there may be more to the story.
Yeah, now, I'm going to express some bias here. I don't mean to, but let's call it incompetency risk, right? Where you're just like,
Yep.
oh my God, where you're just at a head slapper, right? So, okay. So now.
So yeah, and then kind of on that line and on your earlier question on trust, and that's where I try and build trust with people is I'll provide an unbiased opinion and versus a financial advisor that may have recommended that the clients get into this mutual fund or this stock and now it's down 20, 30, 40%. And so their first reaction is, well, no, it's still a good company. We got to stay in. And maybe that is the right thing, but we still need to ask the question. So I try, because I'm not getting paid for it, I'm not giving specific advice. I'm just asking questions of people to ask themselves, to ask their advisors, ask their spouses and their, the loved ones who share in those decisions or in those resources and kind of feel what is their real risk tolerance, what is their real need and then take it from there and take really a lot of it is just take the specific investments out of the conversation.
Right.
Microsoft and Intel and all these companies and Facebook, Amazon, Google, they all kind of perform in the same range and they're all correlated to each other for the most part. There's always going to be exceptions, but the market drops 10%, 80% of the stocks in the market are probably down, 8 to 15%. So they're all correlated. And so for me, it doesn't matter if they buy Amazon, Facebook, or Google, they're buying a large cap tech company. And so what do we think what does the market hold for large cap tech companies over the next, one day or 3 months or 3 years?
Wow. Right. See, this is one of the things that amazes me about this whole process is ultimately, I'll refer to it as bias. Okay. So again, if I am tied in at some level, right, the next thing you know, I kind of have a tendency to see the world through some of those lenses. Staying detached is very difficult. I've experienced this personally with regards to some of the technology companies I've worked for and through. So in that concept of staying detached from bias, okay? So I like the idea of neutral advice that knows WTF, right? That's in a place where they can say, hey, I may or may not be right, but here's a platform of ideas that you can kind of pick through and you can start to assess whether or not you think I'm of value. What would be a couple of the core ideas, I guess, that you would throw forward in this moment of crisis? What's a couple of key principles that you would just like, oh, okay, this Matt guy, here's how he thinks?
Yeah, for me, it's all about the personal client or investor's finish line. So when do they want to retire? When do they want to quit their day job, or at least have the option of quitting their day job and generate income from their portfolio? So are they above the curve? Are they behind the curve? Or are they right on track? And that tells us a lot right there, because I've had it all over the place where people, they want to retire on $200,000 a year next week, and they couldn't retire on $20,000 a year. So they need to keep the pedal to the metal and take as much risk as they can and hope they get there. On the flip side, I have clients that can live on $20,000 a year and they've got $2 million in the bank. So they need to earn 1%. So those kind of people don't need to take a lot of risk. They want to help their children and their grandchildren and things like that. But that's the first one to me is where do you want your finish line, and what do the numbers look like, or your probable finish line could be at?
Interesting. So, okay. So, before we go too much further, I just want to insert a quick commercial. Here you go. Here's a commercial. So, hey, you're amazing and you know how to run Google. So next time you're out there and you're listening to a podcast or you're watching a thing, watching some videos, seeing something on Facebook, whatever, use the power of the internet because you are amazing and do some review. Don't believe everything you read. Don't believe everything you see. Certainly don't believe everything you hear. Do your fact checking because you are amazing and you'll know the truth. So there you go. That's our commercial for you. You're amazing. There you go, Matt. You like that?
No, that's perfect. And that touches on, a lot of building financial plans and really having people own what they're doing and be able to understand that, I don't want to research 8,000 stocks. So it's worth hiring an advisor to do this. But how much do I even want to put into stocks? How much do I want to put into real estate? How much do I want to put into alternative asset classes or bonds? Or how much do I want to bury in my backyard in case everything gets ugly?
Right.
So that there's an answer to all those questions, and that answer differs a little bit for each person.
Hedging with hand sanitizer, homie. Right?
Yeah.
Well, so, okay. So, so the Acme Podcasting Network, we're a content aggregator. Now, certainly, we originate some content, as you can tell. I mean, Matt and I talking about stuff. But we also, like, if you have what I would call some fringe media, right? If you have, like, an underground podcast or something and you're looking for somebody to help you with it, Acme Podcasting Network, we are your homies, okay? And then the dip, Matt, if you don't mind, we're going to keep this going for a while. Not today. We'll wrap it up here in a minute today. But at least during this state of, quote, uncertain times, I think contributing kind of at a volume level, right, to, just a calming voice makes sense for us for the now. Ultimately, if everything's okay tomorrow, next week, whatever, we might turn the dip off. And if everything continues to be so calamitous, well, I don't know, we might start podcasting 3 times a day for all I know. I mean, my God. So, okay.
Well, yeah, and we should expect some news coming out possibly tonight, maybe tomorrow, but Federal Reserve is probably going to, no guarantees, but I'm guessing they're going to lower rates. If we see another big drop like today, they may even go back into their trick bag and come up with quantitative easing again.
Oh,
and if people remember, 8 to 10, we may see some progress on the coronavirus. So if it slows or anybody talks about some medicine that the miraculous cure, that's a long shot, but I would look first to the Fed making an announcement tonight or tomorrow that they may lower rates again.
Right. And this is the other thing. I would guess, I mean, my way of putting it is just expect more, and whether that more is awesome or that more is just, more chaos, expect more, because we are in the what seems to be a ramping up. Certainly, I personally, I'm an optimist. I hope for the best. And at the same time, part of the dip is also the rest of that equation, right? So, again, your name today?
Matt Baltz, Baltz.
So, okay, Matt, so if I like you and I want to actually just reach out direct and have you either point me to somebody that that you can say, yeah, this is a trusted voice, or I want to share part of my story and get some guidance from you, how do I do that?
Well, that can be email is probably the best bet at baltzmatt@yahoo.
Oh, there you
go. BALTZMATT@yahoo.com.
That's pretty straightforward. And then if I dare, okay, let's say I want you to advise me. I mean, you can't just advise everybody for free. You don't do that, do you?
No. And so, I guess through Acme podcast listeners, I'd be willing to talk to people and help identify some questions. And then for specific advice due to licensing, and the person that I sold my practice to and my longtime friend and business partner would be somebody that can help if somebody would like specific advice. But I can provide general advice, economic stuff. I think questions to ask their advisors. I can look at a allocation strategy and maybe say this is how I might allocate somebody, and this age range or this income range or this asset net worth range. And so I'm happy to provide general information to all of your listeners and then provide some value to then see what their circumstances and then either line them up with a good advisor or give them some great questions to ask their current advisor.
Great. I dig it. Okay, one last big question for you. Okay, so it is 3/9. I'm getting ready to go to bed, and I'm thinking about this stuff, right? What are the questions I need to ask myself before tomorrow, before I start? What do I want to be watching in the news? What do I want to see tomorrow?
I'd like to see if the Federal Reserve were to lower rates and the market would hopefully see that as a positive sign and start to rally. Or if if oil hits the bottom, or if there's any kind of positive news on the virus. But those are the two main things driving it down are oil and the coronavirus. And then potential up would be anything that helps those two, or the Federal Reserve, or possibly an economic stimulus package, something along those lines. But those are the things that are going to be the main headlines that I think will drive the markets.
I dig it. I got to add my 2 cents just for fun because I am the dip, okay? And the dip would just say this, and I just want to see competency. If I can see competency, I will have trust. If I see incompetency, I will be like freaked out.
Yeah. No, then you're right. We're pricing in, the market is pricing in 3 to 5 steps ahead. So until there's some answers have been given on a couple of these fronts, then people will assume the worst. They don't want to be left holding the bag if we see the writing on the wall and go, oh yeah, I guess we thought that was coming. Maybe we should have done something. So people are over exaggerating, I think, right now. But that's common when you're over allocated or you're not diversified going into times like these.
Wow. Well, so I dig your contribution. I'll just finish with this. Okay. So we may not be right. We may not be wrong. What we are is trying to be helpful. So ultimately, take this advice with a grain of salt, measure it against other advice you may hear. Certainly recognize we are in a fluid environment. Again, some things could happen in an instant and everything get better, and a lot of this just seem like, we'll say, hyperbolic worrying, right? On the other side of that is, we could come back in a week and tell you, sell everything and go to a different place, homie. So just hang with us and recognize that what we will try and do is tell you the difference between what we know and what we think, okay? And we'll try and be, if nothing else, a safe refuge of a trusted voice you can at least, express a dialogue with. Matt, you're awesome.
Oh, yeah. Well, thank you, Dan.
So, I'm going to call you up after this. I'm going to hang up on you here in a sec. I'll put the file away, and then I will dial you up, and we'll decide if we want to do more of this. I'll be right back.
Sounds great.
Thanks, pal. Bye.
Thanks.
All right, so that's episode 001 of The Dip. Again, it's Dan with the Acme Podcasting Network. We are a content aggregator. We're a content originator. Matt's a good cat. Okay? I like Matt. Matt's teaching me, and I appreciate that. I also like that when I approached Matt today, I said, I want to make some stuff that helps people understand that, look, there is help out there, even if it's just somebody to just listen to and feel a little more like, some of my own thoughts are either validated or not, right? All that stuff. So, thank you for hanging out with us on episode 001, The Dip by The Dip. Pragmatic financial advice during uncertain times. Stay safe and recognize. Recognize you got some pals out there, all right? Acme, Acme, Acme.
It's the Acme Podcasting Network. Hey, we really appreciate you listening.